In today's video, I'm going to be talking about Fibonacci retracement, which is the tool that I use to help me properly get my entry and exit price, right? In order to use the Fibonacci retracement properly, you definitely have to watch the market structure video that I made previously, because that is definitely going to help you place the fib properly, right? So you cannot just place the fib just to place the fib. You have to place the fib from structure to structure, right? So the first thing I'm going to do is I'm going to show you guys how to insert the Fibonacci retracement tool and what levels I personally use to help me with my entry price and my exit price as well, right? So it is very easy to grab your Fibonacci tool retracement. All you have to do is go to Insert, Objects, Fibonacci, and select the Fibonacci tool retracement and drag it, right? So that's all I want you guys to do for now. So once you've done that, right, as you guys can see, so these are the levels that I use for the fib, which is minus 61%, minus 27%, 0%, 38.2%, 50%, 61.8%, 78.6%, and 100%. I'll be going over what the values mean and how you can use them. But for now, I know your fib retracement level is going to be slightly different from mine. So all you have to do is right click on the fib, double click on the red line, which is the Fibonacci tool retracement, then right click, go to properties, and then go to fib levels, and then take your time to modify your fib levels to make them the same as mine, right? You have 0, 0, 0.382, 38.2, 0.5, 50%, 0.618, 61%. You have 1 and then 100%, minus 0.27%, minus 27%, and you have minus 0.61%, minus 61%, and you have 0.786, 78.6%. And these are the levels that I use for my fib retracement, right? So now I'm going to show you guys how to properly use the fib as a confluence and how the fib is going to help you get a precise entry, right? The first thing you have to do is, like I've mentioned in my previous videos, right? I trade with the trend at all time, right? I never go against the trend because I found it very hard for you to trade against the trend because, like I mentioned earlier on, you do not have enough capital for you to place a sell in an uptrend for the market to actually reverse and go your way, right? So if the market is trending up, make sure you look for buys only. If the market is trending down, make sure you look for sales only, right? That's how I use the fib properly to help me get a better entry. In this scenario, right? Let's say if you're looking to day trade. If you're looking to day trade, you're probably going to spend your time on the 1 hour and the 4 hour time frame. And of course, make sure you go to the daily time frame and make sure it is in an uptrend, right? But if you're trying to day trade the daily 4 hour and 1 hour, that's where you're going to spend the most amount of time. For you to place the fib, like I mentioned earlier on, you must know how to identify your market structure, right? In an uptrend, you're getting higher lows and higher highs. In a downtrend, you're getting lower lows and lower highs, right? So what I do is to help me identify my structures are the rectangle boxes, right? The first thing I do is, right, I make sure the market is trending up. As you can see, it is an uptrend, right? And the second thing is I go to grab my rectangle boxes by clicking on insert, right? Objects, rectangle, and then you're gonna have to start drawing your rectangle boxes, right? You're gonna have to place rectangle box down there, right? That was a low, right? The market went all the way up to give you a high, right? And then went all the way down to give you a high low, right? So in the uptrend, you're getting higher lows and a higher high. And this is where the fib is going to come into place, right? So let's say if you realize the market gave you a low, went all the way up to give you a high, all you have to do is wait for the market to retrace to create the higher low for you to buy it, right? In an uptrend, you'll be buying at the higher low. In a downtrend, you'll be selling at the lower highs, right? I'll be looking for a downtrend example so I can show you guys, right? So now you might be asking yourself, how do you know when the market is done retracing, or how do you know exactly when to get in? And that's when the fib comes into play, right? All you have to do is go to insert, right? Objects, grab your fib. The minute you realize the market gave you a low, gave you a high, and started retracing, all you have to do is, if you're looking for a buy, start your fib right at the very bottom, drag it all the way to the top, right? Just like this, right? You're gonna have to drag it from the 100% and stop it at the 0%, right? If you're looking for a buy, you start the fib at the bottom from the 100%, drag it all the way up to the 0%, that's where you stop. And then you're going to wait for the market to retrace between the 50% and 61% level. And then you're going to wait for the market to create some type of support level between the 50% and 61% level for you to place the buy, right? Once you place the buy at the 50% level in this scenario, if you did take this trade, you definitely would have won the trade, right? If you placed it by the 61% level, the market would have went all the way up, right? And then you'll be looking to get out at the 0% and minus 27%, right? The 0% will be your TP1. You'll be looking to get out the 0%, right? Which is around this level and or minus 27%, right? Typically, I tell all my students at the 0%, they should be at least securing 80% profit, right? Let me do it again for you guys, right? So the first thing you have to do is, right, you have to be able to identify the trend. As you can see, the market was in a crazy uptrend on a 4-hour time frame, right? You have a low, you have a high, you have a higher low, right? And the minute you realize the market gave you the low, gave you the high, and started retracing, right? Started retracing, and all you have to do is grab your fib, right? Place it from the low all the way to the high, right? From the 100% all the way to the 0%. And you're going to wait for the market to create some type of structure, some type of support level between the 50% and 61% level for you to buy, right? As you can see, the market give you 1, 2, 3, 4, 5, 6, 7 touches at this at the 50% level. And in my previous video, I went over support and resistance levels, and I told you guys once you have 2 touches or more at the support, at the line, right? I'm going to grab the line and show it to you guys, right? That is a support level. As you can see, you have 1, 2, 3, 4, 5, 6, 7 touches, and so on and so on. So that was a nice support level for you to buy it at the 61, sorry, at the 50% level, right? And let's say if you do get in at the 50% level and then the market decided to go below the 50% level and go for the 61% level, right? You can add a second entry at the 61% level, right? And then you can write it all the way up at the 0% level, right? The 0% level will be your exit price. You're going to get in between the 50 and 61% level. You'll be getting out between the 0% and minus 27% level. You must trade with a stop loss always. A stop loss typically going to be at the 70.6% level. I'll be going in more details later on in the last 2-3 videos and show you guys how to properly place a buy or a sell with other confluences that I've made in the previous videos, right? So this is me telling you guys how to properly use the fib retracement level. And obviously there's more into it, right? I'm just giving you guys the very basic right now, step by step, right? So you guys don't get overwhelmed, right? But later on, I'll be going over how to properly place a buy or how to properly place a sell, right? But for now, if you're looking for a buy, right, you'll be looking to buy at the higher low because it is an uptrend, right? And you're going to repeat the same process again, right? So you're going to grab the rectangle box again. Let's say if you did take this trade and you made money, and then the market went all the way up to give you something higher than the previous high, which is a higher high, right? And then you're going to wait for the market to start retracing again to drop to give you the next higher low for you to buy it again, right? So now all you have to do is grab the fib retracement level, place it from the low all the way to the high, right? From the low, which is 100%, the high, which is 0%. As you can see, right? The market went for the 61% level. Like I said, anywhere between the 50 and 61% level, that's where you'll be looking to buy it. As you can see, the market touched the 50% 1, 2, 3, 4 times. Let's say if you did place a buy at the 50% level, then you realize the market dropped a bit lower to go to the 61% level, right? Then you place a second buy again, right? Second entry, then you'll be riding it all the way up to the 0%, right? So right now, if you did place a buy at the 61% level, you'll be in drawdown for a little bit. But as long as your stop loss is below the 78.6% level, you still would have won this trade, right? We call this liquidity sweep, right? Liquidity sweep is when the market went below the 61% level to grab everybody's stop loss, and then they're going to release it, then the trade should be going your way. We call this liquidity sweep, and I'll be making a video about liquidity sweep as well, right? So what I'm trying to tell you guys, right? The fib retracement is definitely going to help you a lot when it comes with entry price, right? It's going to tell you kind of like precisely when to get in and precisely when to get out, right? If you do get in for a buy between the 50 and 61% level, you'll be looking to get out. Your TP should be at the 0%. Your stop loss should be 78.6% level. That's pretty much it when it comes to looking for a buy using the fib retracement tool, right? And I'm going to show you guys how you can also use it to look for sales as well, right? So the first thing that again you have to do is you have to trade with the trend. If the market is trending up, right, you're going to get a higher lows and higher highs. You're going to get a low, high, higher low, higher high, and a higher low. And then you'll be looking to get in only at the higher low, right? And the higher low is usually going to be created between the 50% and 61% level, right? You have to be extremely patient to trade the way I trade because I'm not interested in buying at the highs. I'm going to wait for the market to retrace to come to my level so I can get in at the higher lows, right? At the higher lows, that's when you should be looking for buys, right? And then you'll be looking to get out at the previous high, which is always going to be at the 0%, right? So this is kind of advanced, right? But I'm trying my best to go through it very slowly so you guys can take your time to watch it over and over and over again. And trust me, the more you watch it, the more you practice, you will eventually get it right. So we're still looking at CAD JPY, right? I was just showing you guys the buy example using the Fibonacci tool retracement. This was a nice little uptrend on the 4-hour time frame, right? I was just showing you guys how to properly place it by using the Fib, and I'm going to show you guys how you can use it as well to look for sales, right? So as you can see, this was a downtrend. On a downtrend, guys, you'll be looking to sell it. You're not going to be looking to buy it, right? So this is CAD JPY on the daily time frame, right? On the daily time frame, guys, that's where you place your key structures, right? If it's an uptrend, it's going to be higher lows and higher highs. If it is on a downtrend, it's going to be lower lows and lower highs, right? So I did place the structures on the 4-hour time frame just to quickly show you guys how you can use it to also day trade and also swing trade, right? If you're looking for day trades, probably going to place your key structures on the 4-hour time frame, the low, the high, the higher lows, and so on and so on. But to avoid a lot of noise in the market, right? I would definitely recommend to use the daily time frame to place your key structures and also the Fibonacci retracement level as well. That's what I use at least, right? Because I typically hold my trade for a few days and sometimes weeks, right? I'm quickly going to show you guys an example on how to use the Fibonacci retracement level to sell it as well for a sell, right? So this is a heavy downtrend. In a downtrend, you should be getting lower lows and lower highs, right? So all you have to do is go to insert, objects, right? And grab your rectangle boxes. So this was a high, right? And the market dropped to give us a low, right? And then went all the way up to give you a lower high. Like I said, guys, in a downtrend, you'll be looking to sell, force for a sell, right? As you can see, this was a heavy downtrend, right? So what you're going to do is, right, grab your fib, right? Go to objects, shapes, grab it from the high, all the way down to the low, and you'll be looking to sell it at the 61% level. As you can see, right, you're going to start with the 100%, right, and stop at the 0% and wait for the market to retrace to come to you. So you can sell it between the 50, right? Let me do this right. This. So you can sell it between the 50 and 61% level. And this is why I will forever tell you guys, you're not going to win every single setups, right? If you hear someone out there telling you they have a 100% winning ratio, make best believe it, they're trying to scam you, right? Because I definitely would have lost this. I would have lost this trade, right? The reason being is, right, I have my high, I have my low. I know for a fact that it was on a downtrend, right? If you do this, you can clearly see what's trending down. The market give me a high, give me a low, and went all the way up to create the lower high, right? Because I'm expecting the lower high to be created between the 50 and 61% level. But sometimes, right, there's something called, like I mentioned earlier on, liquidity sweep, right? Because the market knows, right? I'm sure I'm not the only one who uses the Fibonacci retracement tool. A lot of traders do use it as well. So they know if traders are looking to sell it at the 61% level, right? They're going to slightly place their stop loss above the 61% level, right? So if you did place this trade at the 50% or 61% level, because you have a lot of touches there, which is a nice resistance level, right? And then if you did place your stop loss at the 78.6, the market would have went all the way up to grab your stop loss and the trade would have went your way, right? So which means you definitely would have taken a loss if you did sell this trade at the 61% level and using your stop loss at the 76% level, right? It is going to happen from time to time. It's not very common, but liquidity sweep is going to happen. You're going to have to take the loss to the chin and get back in the trade. Because if you did realize that the market did grab your stop loss and goes back below the 61% level, the minute the market goes back below the 61% level with full momentum, what I mean by that is you can see a nice bearish engulfing. So it is time for you to sell it, right? Let's say if you did lose this trade and the market went back below the 61% level to create this beautiful lower high, you place the sell again, right? Stop loss above the 70.6% level, and then you would have gotten out at the 0% level for TP1 or minus 27% level for TP2, right? So what I'm trying to say is, right, I'm just trying to show you guys how to use a fib retracement level for a sell and how to use it for a buy, right? If you're looking for a sell, you go to insert objects, right? Fib retracement level. Then you're gonna have to grab the fib from the high, right? The first thing you have to do is you have to make sure it is in a downtrend, right? For you to sell it, of course. Then you have to make sure it is in an uptrend for you to buy it, right? So you place that you start with the fib at the very top, grab it all the way at the bottom, right? So this is going to be 0% retracement to the sorry, this is going to be 100% retracement to the 0% retracement. This is where you stop. And as soon as you realize the market started retracing, all you have to do is, guys, is wait for the market to create some type of resistance level between the 50% and the 61% level for you to sell it, right? Once you sell it, your stop loss should be 78.6% level, and then your take profit should be at the 0% level, which was a previous low, right? So that's how you use the fib as a tool for a sell or for a buy, right? And you can also use it as for TP and also stop loss as well, right? Let's say if you did win this trade and you realize the market dropped again, right? Once the market dropped, it is going to give you something lower than the previous low, which is going to be a lower high, right? And again, guys, if you did watch my market structure video, you should know in a downtrend, you get lower highs and lower lows, and your only job is to sell at the lower high, right? And in an uptrend, you got the opposite, which is the higher low and higher high, and your only job is to buy at the higher low, right? So the minute you did make money off of this beautiful CAD JPY sell, right? And then you place your lower high, sorry, you place your lower low because this low is lower than the previous low. And then the minute you started seeing the market retracing again, guess what, guys? All you have to do again is grab your fib, retracement level, place it from the most recent lower high to the most recent lower low, right? Because this was the most recent lower high because you did make money off that lower high. And this was the most recent lower low because this flow is lower than the previous low, right? And then you're going to have to wait for the market to retrace between the 50% and the 61% level for you to sell it again. And if you did, guys, guess what? You definitely would have made money again, right? Yet again, you do not place the sell as soon as the market goes for the 50% or 61% level. You need to wait for the market to create type of resistance level, as in like giving you like 2 touches or more, right? 1, 2, 3. The more touches you get at the lower high, the better it is for you to sell it, right? Because it is going to tell you that it is a strong resistance level, right? Vice versa, right? The more touches you have at the support level, the better it is for you at the higher low for you to buy it, right? So do use the Fibonacci retracement correctly. You'll be looking to buy or sell between the 50% and 61% level. And then your TP will be at the 0%, right? And your stop loss will be at the 78.6% level. That's pretty much all you have to remember, right? But yet again, take your time to watch this video over and over and over again, and take your time to also practice it. And then I'll be going in even more details on what to look for before you place a buy at the 61% level or before you place a sell at the 50 or the 61% level, right? I'm just giving you guys the basics on how to use the fib retracement correctly, which is the first thing you have to do is make sure the trend is on your side. If it is in an uptrend, you look for buys only. If it is in a downtrend, you look for sales only. In an uptrend, you get higher lows and higher high for market structures, right? In a downtrend, you get lower lows and lower highs, right? And in an uptrend, you only be looking to buy at the higher lows, right? And in downtrend, you only be looking to sell at the lower highs, right? In this scenario, right, the minute you realize the market is trending up, right, the market did give you, right, a low right here, right? It went all the way up to give you a high. Since that is a daily time frame, right? You grab your fib. I'm just doing this quickly to show you guys, right? From the low all the way to the high, And guess what? It did come. This is a perfect example, guys, right? Like I told you guys, right? The more touches you have at the 50 and 61% level, the better it is for you. So you definitely would place the buy at the 61% level, 50% retracement level. As you can see, you have 1, 2, 3, 4, 5, 6, 7 touches, right? If you did place the buy, you definitely would have been in money right now. And then as you can see, the market is currently going up. Then you should be using this level for take profit, right? Stop loss is 78.6% level, take profit at the 0% level, right? And then it depends on the pair that you're trading as well, right? Because some pairs they have a huge pip count, which means if you do use 70, if you do use the 70.6% level, you'll be risking a lot of money. But I'll be going over all that in details in the later videos, right? So hopefully you guys learn a thing or two from this Fibonacci retracement tool video. And like I said, take your time to watch it and take your time to go ahead and practice it as well. I'll be over in more details in the later videos that I'm going to film so I can show you guys when to properly place it buy and when to properly place it sell using all the confluences together, right? I'll catch you guys in the next video.